Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of June 12th through June 16th, where we'll try to help you determine will the Fed pause or skip in June and hopefully help you make money trading, whether we get a Fed pause or a skip or a rate hike in June. So let's get started. So here's our Google document with our notes for our weekly trading game plan for the trading week of June 12th through June 16th. We store our notes in a Google document that's publicly accessible, and you can find the direct link to our notes in the description box below. We keep our notes also in a publicly accessible Google Drive folder. And again, you can find the direct link to this Google Drive folder in the description box below, so you can refer back to these notes as well as our notes from our previous weekly trading game plans. And our notes contain links to bonus videos, all the tools that we're using, etc. So we hope that all helps. Good morning, Kyle. Thank you for joining us. Glad to see you. Hope you're doing well. Welcome, Nugam. Thank you also for joining us. Ricky Khan, Flip of the Shippa. Glad to see you all in the chat today. Hope you're all doing well. So we'll take a look and see how the markets ended up on Friday. You see, it's a little bit of a bumpy ride, but they eked out a small percentage gain on Friday. So they all ended the week positively. We see we had fewer advancers and decliners on Friday, so about almost 30-60 advancers to decliners, 76% new highs, 23% new lows. Got about 58, about 60-40 above their 50-day moving average, and it's about a 50-50 split above and below their 200 day moving average. That's a bullish signal towards the end, but again, we see kind of a roller coaster ride, probably a sell-off going into Friday, going into the Fed meeting, so a little bit of risk off in that regard. We saw rotation back into the megatech FANG companies, so Microsoft, Apple, Tesla, Nvidia, Google not so much, but again, Friday was a rotation back into mega cap tech, the FANGs, as Thursday was a rotation out. We've been talking about this sector rotation and how we can make money trading these sector rotations for quite a period of time. Welcome, Easy Mike. Thank you for joining us. Hope you're doing well. So any news items? Prep for the Fed decision. Again, that's going to be the big news, the big prep for this week. Some Ukraine stuff. The S&P has entered a bull market, so technically the S&P 500 is now 20% or more above its previous low. So technically, the S&P is in a bull market. I believe the Nasdaq previously achieved a bull market. See, oil, even though OPEC was, they had Saudi announced a voluntary cut last weekend, and it did bounce up into the low 70s. We can see it's now declined back to about that 70 support level. Natural gas, again, has just been range bound between 2 and 3 lately, between 2 and 250. Gold is testing that resistance level at 2,000, as we'll see in the futures. Needs to break above and hold above 2,000 to really make a next leg up. Again, the dollar's been kind of oscillating 103, 104, so the euro's 107 or so, and we see the treasuries bounced up a little bit. They're still hovering below 4%, and we'll see if the Fed decision causes any surge in the treasury yields at all. So we'll look at the groups, the sectors, the industries, also in FinBiz. So again, Friday, we saw this rotation back into technology and consumer cyclical, rotation out of real estate and basic materials. Essentially, Thursday, we had a rotation into real estate, basic materials. Actually, real estate had a couple-day run, seems to be recovering. We'll see that in the weeklies. Same thing with energy. So rotation out of energy on Friday, but for the week, we can see energy was one of the top gainers. We see real estate, basic materials had a gain. And for the week, technology, communication services were the weakest. But again, on Friday, we saw that rotation back into the weakest sector for the week. And we've been seeing that, these rotations taking profit in the leaders, money flow into the losers, and then we see this rotation. So again, for the month, though, technology, consumer cyclicals have been strong, energy positive, real estate pretty neutral, basic materials a little negative, and the defensives for the month were pretty negative. So we'll see if this rotation continues, and we'll keep playing this rotation as long as we can make money trading this rotation. And we'll talk about some of the ETFs later on, but Easy Mike's pointing out that some of the ETFs are going to reverse split, which they typically do when they get below $5 or so, or below a certain level, then they typically reverse split. And Ricky's asking if it's bullish. Well, it does reduce the float. However, these reverse splits in these ETFs, particularly the leveraged ETFs, is very different from a reverse split in a stock where they typically then turn around and resell and it causes dilution, etc. Essentially, these reverse splits in the ETFs just allows them to maintain a number of shares so they can keep offering, keep selling shares, and it doesn't really dilute. It does affect also the options. So if you were holding 100 shares of one of those ETFs and selling covered calls against it, when they do the reverse split, you might not be able to sell covered calls against it because you're not going to hold 100 shares anymore. So that's something to consider. So I hope that all helps. Good morning, Walter Lyons, Alan Krantz. Thank you for joining us. So look at the industries as well. Again, I'm, in my humble opinion, sector rotation's been the name of the game lately, even though the markets have been going up. Essentially, in my humble opinion, they've been going up by rotating sectors. We see them rotate into the FANGs and then take profits out of the FANGs, rotate into another sector, and it tends to push or at least hold the indices up there. So I think that's supporting this kind of melt up in the indices. So Friday, we see semiconductors made a resurgence, see some travel, some retail, again, some of the beaten down sectors, software, again, technology, farm products have been beaten down, airlines beaten down. Some of the REITs were somewhat positive, coal, a little positive, again, energy. Uranium slightly positive. Again, uranium had a rotation, a positive rotation. Now it looks, it's turning down a little bit. Worst sectors, gold, silver on Friday, although gold and silver, I believe it was Thursday, had a positive day. Some energies are negative. So for the week, again, coal, energy, airlines, retail, basic materials. So here's coal, steel, aluminum for the week, I believe, was positive. Copper had a recovery. So solar, we see that rotation in and out of solar. So silver and gold for the week were negative. I think, again, they had a positive towards the end of the week, Thursday, maybe Wednesday, Thursday. Again, semiconductors very positive for the month. Uranium positive for the month. Solar positive for the month. Silver and gold. So again, rotation back into silver gold. We'll see that silver actually broke above the 24 support level and held. So it's on a nice upward trajectory towards, the next level is probably 25. Gold, again, needs to break that 2,000 resistance level, hold above 2,000, and then it can leg up again. So we'll be, again, watching for these sector rotations and playing those as a good way to make money trading, particularly while we wait, for the Fed decision, wait for the market. Is it going to leg up? Is it going to get rejected from the recent highs that it's been making? So Okay, so the economic data, I will bring that up in investing.com. There wasn't a whole lot last week, and then we'll talk about the events for next week. Remind me too, Kyle, when we talk about some of the ETFs that we use to trade silver gold when we get to the ETF section. So again, this week we talked about the OPEC meeting. Saudi Arabia is doing voluntary cuts, reducing their production by about 1 million barrels a day. It had an initial pop in oil, but then it's receding back to that 70 level. Factory orders was less than expected. So we're seeing, as we've been talking for quite some time, we're seeing, slight indications of recessionary, the economy slowing, manufacturing slowing. We could see that. So the economy's slowing. There's still, the jury's still out whether we're going to get a recession by the end of this year. And essentially, again, we're not going to know whether we are in a recession, got a recession until, probably fourth quarter of this year, because we have to have 2 quarters of negative GDP for them to technically say that we were in or are in a recession. So again, we're not going to even know if we had a recession or are in a recession until fourth quarter of this year anyway. So we saw crude oil imports was up, inventories was up. Gas, consumer credit continues to go up. And then we got continuing job claims on Thursday. So continuing was down. Initial was up. So in terms of the wage pressure, wage inflation, that's a positive for the Fed. But it looks like, people are able to continue to find jobs, and we saw that in the JOLTS data previously. There's plenty of jobs out there. So although more people are losing jobs, getting laid off, they're not staying and continuing claims for an extended period of time. So again, the job market's still pretty resilient, and so the Fed could hike, and without too much fear of having the unemployment rate, spike up too quickly. We see natural gas storage was pretty stable, but again, natural gas prices hasn't been going anywhere. Rig count dropped slightly, so again, that's continuing to decline. I believe it was Chevron also announced they're not going to increase production. They're going to hold their production at their current level for this year. So just very quickly, upcoming week, the main events are CPI on Tuesday, PPI, and then the FOMC meeting where decision comes out on Wednesday. So those are and then we got jobless claims. But again, the main events are in Michigan sentiment on Friday. But again, everybody's going to be waiting for this Fed decision. Are they going to pause? Are they going to skip? So we'll look at the whole calendar, but good morning, MD. Thank you for joining us. So again, on Tuesday, we get CPI, and it's hypothesized that the Fed will already have this CPI data when they go into their meeting. So we can expect, if this comes out hotter than expected, the market's very likely to react to that, as it would potentially increase the probability of a rate hike coming later that same or the next day. So then on Wednesday, again, everybody's, there's PPI data will come out. I would expect, they'll have that PPI data already. And then at 2:00, you'll get the statement, FOMC statement, the expectation, and we're going to look at that in more detail in the strategy section, what the probabilities of a pause, a skip, a hike are. But we'll get the statement, and then we'll get, Powell come out at 2:30 and do his press conference. And in my humble opinion, I think the wording in this statement will be critical. So if they do pause, if they do not raise hikes, and it's unclear, just not raising hikes doesn't tell us, is this a pause, is it a skip? Might they raise again in July? So the wording of the statement, as well as what Powell says in the press conference, is going to the market's going to be hinging on every word that they say to try to indicate, is this a pause? Is this a skip? Are they done? How close to done are they? So again, expect a lot of volatility based on, is it a hawkish pause, a hawkish skip? And are they threatening, another hike in July and going forward? Also, they come out with their dot plot, so that should show, where do they expect the interest rates to be in the future. So that will be telling as to future rate hikes as well. So then Thursday we get jobless claims. Again, this will all be post Fed decision. So this will be leaning into the next Fed decision. And we get typical oil, natural gas. Then you can see the Fed officials are already going to start talking on Friday. So, we'll hear after the decision, was it consensus? What is this really a pause? Is it a skip? What do we expect looking forward? So, welcome the Crow. Danelle D, thank you for joining us. So we still have some earnings. Again, you can see the earnings calendar also. You see Oracle, Eaton. So we've got, some sizable companies still announcing earnings. Oracle, I'm sure they'll probably talk AI, their approach on AI, their cloud, etc. So might get some more AI words coming out, some more hype. It's a biotech. Again, you can go through this. It's, we're winding down. Lennar, so home builders. But again, I think the focus, there's Kroger, so grocery. Again, I think the focus is going to be, on the Fed. And I think, everybody will be kind of waiting to make their move until we get the Fed decision on Wednesday. So just a reminder, after that, the next Fed meeting is the 25th, 26th of June. So again, they're about 6 weeks apart. Also, a quick reminder, as earnings reports come out, we have an automated feed into the earnings reports channel of our Discord. Our Discord's free to join. I'll throw the link to our Discord up in the banner. You can also find a invite to our Discord in the description box below. Again, free to join. And as earnings reports come out, they get automatically posted to this earnings report channel in our Discord. So a real easy way for you to keep up on the earnings as they're reported. So we hope that all helps, and we hope you'll join our Discord and take advantage of that, as well as our community of helpful traders, and help each other make money trading, succeed in your trading career. So let me grab a drink, and then we'll look at the market screen in Webull as well. Just a quick reminder, if you're not already using Webull, you can still get up to 12 free fractional shares by funding an account with any amount. So 6 to 12 fractional shares. They're also offering, up to 5% interest rate on idle cash, and using their Webull cash management. So there's plenty of reasons to use Webull. We use Webull for our market analysis, due diligence, and the majority of our trading. So we appreciate it if you use our affiliate link to Webull that you can find in the description box below. And I'll throw that also up in the banner real quickly to help support our channel, all of our efforts to provide all this free content. Yeah, we're going to talk about Palladium, PALL. Also, we'll look at that in the ETFs as well. We'll see in the futures that Palladium took a dip, and we'll also be talking about that again tomorrow, how we're going to play that dip in Palladium using PALL. So on Friday, we could see we had more decliners than advancers, although the number of decliners was very small. Again, we got kind of a bimodal histogram, small amounts of advancers, small declines, long tails. We look at the inflows we've seen now for several weeks, I guess probably about 3 weeks or so. We see this inflow in the NYSE on Friday. We see this outflow in the NASDAQ. So again, although the NASDAQ's been running up, we see money flowing out of it. So it's probably, the mega tech FANG companies that's, holding the NASDAQ up, your NVIDIAs and Apples, etc. Another quick reminder, you can get the near-term earnings calendar here on the calendar tab in Webull, so you can see what's coming up in the near term before market open, after market close. So easy way to keep up with the near-term earnings. So look at the industries for the week. Oil and gas, positive. So energy, transports, positive. Home building, again, positive. Home builders are doing fine. Just home sales, existing home sales, not so great. Paper, again, the wildfires in Canada. You'll see timber, wood went up, and I'm sure that's due to the wildfires in Canada. Defense, positive after the debt ceiling deal. Construction, again, relatively positive. Consumer goods, somewhat positive. Again, energy, natural gas. Again, construction. And uranium, again, pretty positive. Again, energy. Look at the ETFs for the markets for Friday. So we've got up on the Dow. Bear small cap, so that's kind of interesting. So that we'll see the IWM had a pretty exuberant run at one point, but now it's all the shorts on the Russell. So be aware. There's people are betting short on the Russell, short on small caps, etc. Now up on the Dow. Here they again short on small caps. Last week we saw positive up on the short on the small and mid cap, and we saw that run. Now they're betting on a retracement. Again, the VIX, short the VIX. We'll see if that starts to pick up going into the FOMC meeting. Again, the CPI, the PPI data, and particularly the FOMC meeting, and again, their verbiage may cause a pop in the volatility. It's been very low. It's sitting, I think probably 13, 14, so it's extremely low. And there was also discussion that the zero DTE options may be a risk of, a violent move in the VIX if we do get some volatility. Bitcoin short, Euro short. So again, we see short the Russell, we see short Europe, long China. So industries, we got nickel, so we got some basic materials, video gaming, that's a new one. On demand, okay, so streaming, video gaming, esports, so that's kind of a new theme. Industrials, technology. So on Friday, we saw the rotation back into technologies and out of basic materials, but we see nickel, lithium are the positive ones. Mix in cyclicals, negative on defensives, negative on real estate on Friday. Again, real estate had a couple days of decent runs, and probably that's a little bit of a retracement. So energy, carbon, copper, metals positive, tanker shipping. So we'll talk about BDRY is one of the ETFs we've been watching for dry bulk shipping. Carbon, copper and metals. And let's see, treasuries. So 7 to 10s, 3 to 7. So kind of your middle of the curve. and high yield. Just checking the chat real quick. Yeah, we can look at DRV, real estate. We've talked about the various ETFs we use or watch for trading real estate, as well as some of the REITs we like. So let's look at the futures. So we can see, all the markets, exuberant runs up after the debt ceiling was resolved. Didn't really have any other fear. I heard it. I don't know if we'll check the fear and greed index today, but I heard it had hit extreme greed. So our thesis: be fearful when others are greedy. Well, they're extremely greedy. So we also see, the S&P's kind of bumping up. It made a new high, but it's testing that resistance, that 4,300 resistance. I guess I should look at each of the indices individually a second, so I'll do that. Again, we see the Nasdaq. It looks like it's topping, hitting some resistance. See that exuberant run in the Russell, and now retracement, and they're betting that retracement continues down. So if I look at each of the indices individually quickly, so we see SPY broke out, it's testing the previous high. So again, we would not be surprised to see a rejection. Let me throw out my not financial advice banner. Again, none of our content should be considered financial advice. We're not financial advisors. It's all of our content is for education and entertainment only. And yeah, I want to look at the Nikkei. We talked about that and also how to play that. Easy Mike sharing some news. Let's zoom out on the SPY again. You see it's had this nice run up, continuing to run up, going to test the previous high. Again, wouldn't be surprised to see a rejection off of that previous high. And again, we'll have to hear what the Fed decision is and how it reacts to that. Qs, again, had a very exuberant run on all this AI hype. So NVIDIA and also the mega cap techs, yes. So, but we got a doji on the last week, so it's indecision. So it could retrace, especially again, given the Fed interest rate. If they hike unexpectedly, if they say anything unexpected, that could cause could even be a violent retracement. Dow has been pretty flat, had this big run up, and then it's just been oscillating. So again, just kind of oscillating there. We saw that run up in the Russell, so it now broke above its moving averages. So those should provide some level of support. So if we do get a retracement, that those moving averages hopefully will hold and provide that level of support. It did have nice run up this week. Look at the VIX, and the VIX has been just pretty declining. Zoom into the VIX a little bit, so we just see that really steep decline down to this. The futures are showing 15. I think the real-time VIX is below 14 right now. So again, if everything is as the market expects, the Fed pauses or skips, or it's very dovish, the VIX will continue to decline. Although again, we might get some positioning in front of the Fed meeting that'll cause some spiking in the VIX short term if the Fed comes out very hawkish in their wording, or if they hike unexpectedly, we might see a pretty rapid increase in the VIX. So we'll see. Okay, we'll go back to the futures. Let me grab a quick drink a second. We'll look at it again. Here's the Nikkei. We looked at the Russell. Here's the Nikkei. It's approaching its recent high. You see it, tweezer topped there, and I like that. It's had this big run up. Again, tomorrow we'll talk about how we're looking to potentially play if it tests and rejects off that top again. And as Easy Mike pointed out, there the change in their financial ministry caused this significant run up. Let me grab a drink a second. So again, we saw this little pop up in oil, and then it pretty quickly retraced back to 70 support, 75, resistance. So it's just kind of been oscillating. We'll see if it breaks back down below 70. Did briefly before, didn't reach the previous low. Again, natural gas pretty range bound between 2 and 3. Right now it's just oscillating below 250, 260. So again, day trades, short-term trades and any of these, but right now there's just no real strong trend. We see, again, gold's hitting resistance around 2000, tested, got rejected, bounced off of 1950, so 1950 support. So we'll see. It'll probably go and retest that 2000 level a couple times, and then we'll see if it can break and hold above 2000. Again, silver we see finally broke above 24 and held, so now it's 24.40. So we'll see it could test 25.26. Copper ran back up, bounced off the bottom, ran back up. Looks like it's kind of topping. And then we see that rapid decline in palladium. Again, we're going to take an opportunity of that, extreme drop. Again, we talked about PALL. We'll talk in detail tomorrow. That's what we're going to look to play, this extreme drop in palladium. Cattle prices have gone up. You can watch DBA. DBA is an agricultural ETF. It's up. We'll talk in more detail. We played wheat on this run up. It looks like it started to roll over. We're going to be watching for that rollover in wheat, see if we can play that. Again, we use the ETF WEAT to play wheat. Okay, we see that run up in lumber, volatility in lumber, probably again due to the Canadian wildfires. And we see generally the treasury prices have been declining. It's been somewhat volatile because we've got the bond, the deluge $1 trillion bond issuance is still an overhang. And then we've also got the Fed interest rate hike. So again, we see the dollar generally weakening. Now it's kind of sitting 103, 104. Again, the Fed interest rate hike will, have a significant impact on treasuries, on the dollar. See the impact on some of the foreign currencies as well. The Australian dollar went up. I believe they hiked rates kind of unexpectedly. So again, you've got different foreign countries, central banks acting differently. So Australia's hiking, we may be skipping or pausing. Europe is indicating, they need to do more to curb inflation. So we'll see some divergence in some of the foreign currencies and markets, I believe. Okay, so we've talked about several ETFs. I'll bring up our ETF spreadsheet. Again, once you identify an opportunity in the futures, a great way to then find potential ways to play those opportunities is with our ETF spreadsheet. Our All Access and BIP Patreons have access to this ETF spreadsheet, as well as our dividend payers and our put spreadsheets 24/7. So if you'd like access to that, again, updates with near real-time pricing and shows the risk-reward profiles, etc. And this is what I use. We identified some opportunities in palladium and wheat and the Nikkei. And so if I want to know how to play those, I can jump over to my Google ETF spreadsheet and identify what ETFs I could long or short those various topics. So if anybody else has any other topics, indices, categories, commodities, etc., you want to look at, let us know. Again, we've got a video on financial sector ETFs, gold and silver ETFs, real estate, that you can listen to those via these links in our notes. And then we've got a whole playlist on how we trade ETFs. I'll zoom this in a little bit, and then we'll go to some of the ones that we've talked about. Got a lot of energy stuff. So let me go. Here's gold, silver. So again, you can see which ones we can trade using gold and silver. So we talked about this, I think it was last week. So we're looking at potentially, shorting the Nikkei using this EWV. The long is EZJ. So I'm looking at, that resistance point in EZJ to determine an entry to short the Nikkei with EWV. Talked about DBA and cattle. I looked at these lithium guys, but they're still pretty high. Again, oil, natural gas. You can find which ones to use to long or short those for day trade, short-term trades. Here's PALL. We saw that opportunity in palladium, so it's getting close to its 52-week low. I like that support level. This is a previous long-term support on PALL. So again, tomorrow we'll be talking about that. We're going to be watching for that PALL to come down to that support level and give us a potential entry. We've been watching IPI. We made some money trading IPI on potash, but it's run back up. I think Walter was talking about some of the real estate, DRN, DRV, so you can see where those are kind of sitting. Again, DRVs, they're both kind of sitting in the middle of their range, so that's why I'm not really focusing on those right now. I'm focusing more on individual REITs and their opportunities. Somebody asked about silver, so short-term trading, silver, we like AGQ. It's a leveraged ETF, long-term holds in silver. We're long SLVO, and that's what we like for longer-term holds, as it pays a monthly dividend. I was looking at solar, but these rays and tan just don't really provide the risk-reward profile I'd like to see. Treasuries, again, they've been kind of sitting in the middle of their range, declined recently. Uranium's kind of run up again. So there's several ETFs for uranium, several individual stocks we like. Utilities, again, not real great opportunity. And again, the VIX has been dropping, but again, it can go lower. And I believe Easy Mike pointed out, I believe UVXY is one of the ones that ProShares is going to reverse split. So, and then here's wheat. We talked about that. So if it comes down 588, we would look to be going long wheat again. And in terms of the Japanese, I was looking at these yen guys versus that short Nikkei, and I like the short Nikkei better. Okay, if anyone else in the chat has any other ETFs you'd like to look at real quickly, or a topic you'd like to see, if I missed it, let me know. Again, if you want to track some of the hype in the AI, artificial intelligence, there's several ETFs, and we did a deeper dive video on each of these ETFs and why we chose these out of those that are available. But you can again see where they're sitting in the risk reward. Okay, again, if anybody has any topics you want to look at ETFs, just throw it up in the chat and we'll look. Otherwise, just a quick reminder, we also have a channel in our Discord where we get a real-time posting of news. So as news comes out, We have a Surf the Markets channel, also the economic data as that gets posted. We have a feed from this Market Watch and Walter Bloomberg. So news, economic data gets posted very quickly into our Surf the Markets channel. So again, as that CPI, PPI, Fed decisions, Fed comments, etc., hit the wire, you can track those by joining our Discord and watching the Surf the Markets channel in our Discord. And again, Discord's free to join. I'll throw that link back up in the banner. And again, you can find an invite to our Discord in the description box below as well. So let me grab a drink a second, and then we'll talk about will the Fed pause or skip in June. We'll look at the Fed rate monitor tool, the Fed Watch tool. And again, we've done videos on how to use each of these tools in more detail. So you can hear those videos on how to use the Fed rate monitor tool, how to stay up to date with the CME Fed Watch tool via the links to those videos in our notes. And also, just a reminder, you can find links to these tools as well as all kinds of other tools and resources in the link section of our homepage, which is beachbumtrading.com, bum without the U. So again, under reference tools, reference links, we've got the Fed Watch tool and the CME Fed Watch tool and the Fed rate monitor tool. So you can always access those under the link section on our homepage, beachbumtrading.com, bum without the U. So let me bring those up, and we'll talk about, whether the Fed's going to pause or skip in June. Okay, so first I'll bring up the Fed rate monitor tool. Both of these are kind of nice. They've got, countdown clock to the next Fed interest rate decision. And then again, we can see the probability right now as to no interest rate hike. So there's a 70-30 chance of no interest rate hike, 30% chance that they're going to hike by 25 basis points. You can see how that's changed in the previous week. So the probability of a pause has gone down. The probability of a hike has gone up over the previous week. We can also see for July right now, we've got a 30% that'll stay the same. 50% it's going to go up, and 17 that it's going to go down. So, the probability says right now people are betting that they're going to pause, and essentially it's a skip, right? Because they're going to pause in June, not hike in June, and then hike in July is what the probabilities are currently saying. So again, as per this Fed rate monitor tool, they're betting on a skip. So if we look at the Fed Watch tool, again, you've got the countdown clock. And again, it looks pretty consistent. So we've got a 70-30, 70%, stay the same, 30% hike by 25 basis points. Again, we can see how that's changed. So it's, the pause was way up at 99%, and now it's dropped to 70%. Hike dropped from almost 0 to now 30%. Can also see the probabilities here in a table, and I'll zoom this up. I thought this was kind of interesting. Again, we have these videos on how to use these tools in more detail, but we see, okay, we've got it staying the same in June, hiking in July, then staying at 525 to 550 in July, and then they're betting on a cut November, December, they're betting a cut. My humble opinion, I don't think we're going to get any cuts this year, and I believe that the Fed officials have been pretty clear that they're not going to be cutting this year, and yet the market is currently again betting on a cut before the end of the year. So I thought that that was interesting to see that trajectory. They're talking about a skip. So again, stay the same June, hike again in July, stay the same in September, and then drop in fourth quarter. You can also see the dot plots here. So again, longer term, we can see, the Fed officials, these are all their various dots, and the median is the blue dots. So we can see going forward in 2024, they're expecting interest rates to decline. So I hope that all helps. My humble opinion, so all this data says that if they hike this week, that could potentially be a shock to the market. The market's, betting that they're not going to hike in this week. So if we do get a hike this week, it'd probably be a 25 basis point hike, and that might cause some, significant drop in the market, significant volatility, because that would be unexpected. So let me know what you all think in the chat and the comments below. Do you think we're going to get a hike? Do we think you're going to get a skip, a pause? What are they going to say? It'll be interesting to hear what you all are thinking. Our other strategies, again, we've got videos on how to make money trading in June. What are the best performing sectors and industries? How do the markets typically perform? And again, I still think the name of the game is sector rotation. I do want to look in our ETF spreadsheet at the various sectors, and we'll talk about how we're playing that in more detail again tomorrow. So again, in our ETF spreadsheet on the screeners tab, we've got this breakdown of the technology components, also a number of other screeners. So again, our Patreon members have access to this at any time. Again, we've talked about, tracking the various technology components, how we're looking at playing these. We'll talk in more detail tomorrow. See SOXL, that semiconductors, it, broke through its upper trend line and then got rejected, and it looks like it's probably going to go up for a retest. Same thing with FANG-U, which is the FANG stocks. And again, we'll talk tomorrow in more detail about how we're going to play those potential rejections off of those peaks. I like the FANG-U in particular, although there's some risk that they keep using the FANG stocks as, kind of a safe haven. So they pour into Microsoft, Apple, Google, etc. It's kind of a risk-off move lately. But we see, FANG-U looks like it had this exuberant run. Looks like it may be peaking, so there might be an opportunity there. We've talked about semiconductors for some period of time. Again, biotechs has significant resistance. It's kind of bouncing around. I don't like the overall NASDAQ quite as much. It looks like it has more room to run, although it may be topping as well. So this is TQQQ, short to the NASDAQ is SQQQ. So we would use that, and the inverse of FANG-U is FANG-D. And again, we'll talk in detail tomorrow about how we're watching for opportunities in both the FANG-D and SOXS, which is the short on semiconductors. So I hope that helps. Okay, if anybody else has any questions, we'll talk tomorrow about our dividend-paying stocks, our option strategies, some of the how we made some money with several of our option strategies, as well as dividend-paying stocks tomorrow. So we hope you all will come back 10 a.m. tomorrow, and we'll be selecting our individual stocks, individual ETFs to put on our top swing trading watch list for the trading week of June 12th through June 16th. So again, if anybody in the chat has any last minute questions, if I missed your question, I apologize. Please throw it back up in the chat and I can answer a few questions for a few minutes. Otherwise, you can, again, always put your questions in the comments to this video. You can ask us questions in our Discord. Just tag us, at BeachBum. Our ID currently is 7313. Apparently, Discord's coming out with you can claim a username. I haven't seen how to do that yet, but as soon as we can, we'll claim BeachBum Trading so we don't get imposters going forward. And again, you can always contact us through any of our other social media sites. We've got a Reddit community. We've got a Facebook group. You can, direct message us on our social media sites, and you can find direct links to all of those on our BeachBum Trading homepage, beachbumtrading.com, bum without the U, as well as, again, all these resources, etc., trading platforms, etc. So we hope this all helps, and we hope this will help you make money trading, whether we get a Fed pause or a skip in June, and or going forward with any other, Fed interest rate hikes, cuts, etc. So again, our goal is to help you make money trading, help you succeed in your trading career. We hope you like this information. We hope you'll smash the like button and again share this with your fellow traders and friends. I want to give a shout out to both Easy Mike and Walter Lyons, who have been promoting our channel and our live chats, live streams, and several of the other shows. I appreciate it. And to anyone else that I might have missed, thank you for promoting and sharing and helping to grow our community. That's our goal, and we hope that you will all help continue to grow our community for the mutual benefit of all of our fellow Beach Bum traders. So we want to keep growing the community, get more people active in our Discord, get more people active in the live chats, etc., because it benefits all traders. So again, we hope this all helps and hope we'll see you tomorrow for part 2, where again we'll select our individual stocks, ETFs, etc., talk about dividend payers, option strategies, etc., for the trading week of June 12th through June 16th. So thank you all for joining us again, and have a great rest of your day. Bye.